Time for some company news now. Thungela Resources recorded solid results as higher coal prices boosted its earnings. The coal miner saw earnings increase threefold on a year-on-year basis to 29.5 billion rand, while net profit was up 162% at 18 billion rand. Thungela enjoyed soaring thermal coal prices last year as advanced economies burnt coal to make up for gas shortages amid the war between Russia and Ukraine. The benchmark coal price averaged at around $270 per tonne last year compared to $124 in 2021. Thungela could have made more but marked a loss of close to 3 million tonnes of export volumes because of Transnet's poor rail performance that hindered the company's results. Now, for more on that, I'm chatting now to CEO July Ndlovu. July, shareholders must have been very happy with you today. You paid 13 billion rands in dividends. What boosted the company's performance this time around?
Our performance has been very pleasing, outstanding results, as you prefaced in your intro, and we're quite pleased to be returning such significant value to our shareholders and stakeholders. Clearly, our performance was defined by the two issues you raised. One, which is the unprecedented prices that we saw last year, some of them boosted by the conflict in Europe, but also our results were dampened by the poor performance by the Transnet freight rail.
Let's speak more about that. Now, the deliveries of coal for export to the Richards Bay terminal fell to about 50 million tonnes in 2022 for Thungela, your lowest in about 30 years. And that was owing to incidents of theft, vandalism and other operating inefficiencies from Transnet. Have you met the EXCO there? And what are they saying about the state logistics firm's delivery of efficiencies this year?
We have created the joint working structure together with Transnet. So we're working very closely and collaborating on finding solutions to some of these constraints. The work we're doing at the moment really falls into two categories. The first one really, which is how do we get the best of what we actually have today, which is the equipment that is currently working in the corridor. And in our North Corridor, or the Coal Corridor as we sometimes call it, Transnet have said that we should be able to do 60 million tonnes. We're working together to make sure that we can deliver that 60 million tonnes. And that work encompasses from improving our security tactics to ensure that we can protect and secure critical infrastructure, improving maintenance and operations, planning and scheduling and delivery, and making sure that some of the critical infrastructure, such as rail signaling, is also of the right level of integrity. And we are making early progress, and we're beginning to see some green shoots. Then the second part of that piece of work is related to the long-standing locals. Clearly, we are quite pleased with the bold step that Transnet have taken to go out to the market to secure alternative original equipment manufacturers that can fix the Chinese locals that are currently standing. We think that will take us back to, once that is fixed, that will take us back to the 2020 levels of performance of roughly 70 million tonnes.
In July, coal prices were higher last year. It was a bumper year, and those don't happen very often. But coal prices expected to go down this year. Have you added a bit of buffer for the company in case that happens?
Look, the prices are softening as expected. As people are beginning to find solutions to the energy crisis in Europe, clearly we expect that the energy crisis is not washed out, as the volume flows of energy units have to stabilize just yet. For instance, we are now exporting to Europe. Russia is exporting to our traditional markets in the Far East Asia. In terms of our own response, clearly what we have chosen to do is to ensure that our balance sheet is robust and resilient to deal with any shocks that may come our way. And that's why you would have noticed that although we've reduced our cash buffer from 6 million to 5 billion rand, we've secured additional bank funding facilities of 3.2 billion, bringing our total liquidity to 8.2 billion.
Now, mining is a big contributor to South Africa's GDP. How much tax have you forwarded to government during this reporting period, if you can give us a number? And given that the Transnet had those failures, could you have perhaps given more to government?
Without question, we could have contributed more, but we're pleased with the contribution we've made of 6.6 billion rand in direct taxes and an additional 2.5 billion rand in royalties. So that is a significant contribution by Thungela. And that's what the Thungela story is all about. Contributing not only to the fiscus, but we're also pleased with what we've done for employees and communities, contributing a further 396 million. So we're sharing the value that we're creating across the board, shareholders, the fiscus, the people of South Africa, and our employees and communities.
Now, there's been great talk of a mixed energy mix in terms of South Africa and also going to renewable energy. A lot of talk of that in the West and Europe as well. Is Thungela moving towards that future, or are you going to keep to coal and hope that, as the companies did last year in terms of Europe and that gas shortage, they come back to you with higher prices?
You have seen that we announced our strategy. We are a coal miner. We are proud to be coal miners. We are proud to be producing carbon units that are valuable and do make a difference actually in the markets that we serve. And in terms of our strategy, you would have noticed that, in fact, we announced acquisition of an asset in Australia. Again, that is beginning to drive our strategy. We think we want to stick in areas where we have the right to win. We announced that strategy a long time ago, that we want to diversify from dependence on a single country, a single piece of infrastructure and Transnet, and we are doing that, and we're quite pleased with executing our strategy.
Well, the shareholders might have been happy in terms of the dividends, but on the market, on the JSE, Thungela shares were down by more than 2.5%. Do you think investors are concerned about the guidance going forward and those issues with Transnet and how that will affect the company in 2023?
The investors would rightly be concerned with the logistics constraints. But our role as management is to control the controllables. We'll run a fatality-free business, we'll manage our costs, we'll manage our productivity in that regard, and we'll work with our critical partner, Transnet, to ensure that we unblock these bottlenecks that have impacted us in the last year and are likely to impact us in the short term going forward.
Well, that was July Ndlovu, Thungela CEO, telling us about the company's results. The company forwarding about 6 billion rand in terms of tax duties to government. It could have been more if Transnet was delivering on those exports.